This is the Amazon one-month overview reading for the month of February 2024. It's currently December 28th, 2023, 2:45 p.m. Eastern Time. Amazon at the time of this reading is $153.95. That's a USD. And the shuffle video for the Amazon February reading was created on December 5th, 2023 at 3:19 p.m. Eastern Time. That's this video here in the lower left corner. So the overall theme and behavior for February is a notable move to the upside. There's probably going to be some a significant amount of negative headwinds highlighted in February, and we have a big move higher even in the face of those headwinds. And or we also have a very negative kind of technical chart behavior that would lead us to believe we're going to go lower. Instead, we have this big move higher anyways. That's crossed with the Emperor card, which indicates an important support level on a one-year chart scale minimum. So likely what happens is and there's a trough at that support level, so likely what happens is that we have a big move off of that support. It probably looks like we're going to break through that support. Instead, we have a big move off of it. Behavior around the highest high. The abundance card indicates a new high of some kind. Very likely, this will be like a high for the highest high for February will be like a highest high for the year of 2024 thus far anyways. And it'll form we have a big move higher through a resistance. We stay above it briefly, and then we break back down through that price level shortly thereafter with the full, shortly thereafter. And then behavior around the lowest low for the month. We have a notable rally out of the low along a diagonal trend line. We break through horizontal resistance on a multi-day scale, meet a second resistance, and then we pull back to somewhere between those two price levels. Before we go any further, I'm going to make sure everybody's aware the whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill, and we do that together as a team by following the rule of karma. I put forth this information for your use, and anybody utilizing this information should be following through on this rule of karma, which is the unwritten agreement between the universe and anybody utilizing this information for personal gain. So the way that you do that is go to our website, tarotfortraders.com, click on resources, and then 5% of the profits from every profitable trade using this information should be donated forward to one of these charities. 5% of the profit should be donated back to the channel through one of these links. It leaves you with 90% of the money. Make sure to spend that money out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. Let's get back into it. Important to understand, not each card's energy is going to line up perfectly with one day of time, even though each card represents about one day. So you have to give it, in some cases, plus or minus one day of wiggle room here or there. In a lot of cases, you won't even need to do that, but there are going to be some cases where you need to do plus or minus one day of wiggle room. And so in cases like that, you want to make sure to follow the sequence of events as predicted, because that won't change. That'll remain accurate even when we're off by a day, and that'll help to keep you on track as far as the prediction. So on the first, we have a rally along a diagonal trend line that ends with a fast sudden move higher, taking us to a prominent peak on a 1 month scale, and then a decline through that diagonal trend line with increasing volatility on the way down. There's also a prominent trough early in the day there. So we go from a prominent trough, and then at the end of the day on the first, there's this big move to the upside, ending a rally and taking us to a prominent peak. And then on the second, we've got the Fool card indicating an important trade opportunity, improbable trade opportunity, standing out amongst other trade opportunities throughout the month of February. It looks like it's a move to the downside from that peak, which is on the cusp of the first second. And then there's a trade opportunity there I'm going to talk about in more detail in the paid version. Sideways rotation on the 5th. We rise to meet the nearest key resistance, and we fall back down and continue rotating sideways. And then there's a trough midday on the 6th, so we probably decline through that support and come into a trough midday on the 6th, out of which there's a big move to the upside. And technicals will probably lead us to believe we're going to go much lower since we broke down through support from the 5th. Instead, we move much higher. And then on the following day, on the 6th, we have a significant move to the downside with a trough in the early afternoon, it looks like. That's followed by a rally into a peak at key resistance on the 8th, a peak towards the end of the day, with a sharp drop overnight, a significant gap down overnight. I'm advised to be cautious there on the 8th. Multiple false tops or bottoms or some sort of really tricky chart behavior. We open at a trough, or we open lower, I should say, on the 9th, and there's back and forth behavior, equal amounts of bulls and bears, inflow and alpha throughout the 9th. Looks like there's a peak and a trough at the end of the day. Hard to say which one comes before the other, but then there's a notable move to the upside over the weekend, and we have multiple failed attempts to break through key resistance on the 12th, followed by a decline that takes us into another significant trough there. And then we have this big move higher on the 13th that pushes the upper end of a range higher, taking us into a peak, probably continues into a prominent peak at the end of the day on the 14th. In the midst of some mixed behavior, there's actually a trough and a peak on the 14th. A trough, then a peak, and then it looks like another trough at a key price level in the morning of the 15th in a period of volatility, and a sharp drop that stands out in that period of volatility. Let's take a look at December and see how we're doing thus far. So at highs around the 6th, 7th, 8th, that was our first highest high. I was a little bit off on the timing of that low. It was a little bit later than I expected, but highs and lows within close time proximity. And then another trough on the 13th. On the 13th, it looks like I was 1 day off on that as well, but we go from this trough into significant highs. We have a highest high indication here on the 14th. Boom, and that was the 14th. Another significant trough on the 18th, ended up being on the 19th, followed by some more peaks, not highest highs, but peaks. And then that takes us into another significant low, or close to a lowest low, here around the 26th, 27th. Looks like it ends up being the 27th. And then that's followed by a prominent peak that'll take place on the 29th. Overall, this is a pretty solid reading. I got the highest high off a little bit. It ended up being on the 14th here rather than the first week, but we weren't too far off. In any case, if you opened up a position in the midst of a trough there, if you opened up a long position, you would have been able to make money by the 8th, that's for sure. The death card, if you opened up a long position in the midst of the death card, you would have been able to close that long position on the 14th for a pretty solid gain. In the midst of a rally on the 18th, there was a day trade opportunity to open up a short and close that short, and you'd see that would have made money. Prominent trough, And then on the 27th, if you open up a long position on the 27th, you'd be a happy camper right now. This was a pretty solid reading, guys. So if you're interested in the paid version, which is where you get all of the best trades that we see for the month, as well as what type of the timing of them and what type of sharp behavior on a one-day chart to look for as far as entry and exit. You also get any trades that are relevant on a multi-month standpoint or a multi-year standpoint, as well as any price level information we're able to extrapolate, and then the overall performance in comparison to the S&P 500. All of that in the paid version. Great way to support the channel, and we know the names of everybody that supports the channel with the paid version because you guys are really the key foundation of support. Without you, we couldn't put out the content that we do. So the way that you get is you go to our services, hover over our services, click on SO Meta Posts, scroll down to monthly subscription, click here to order. And for the Amazon reading, the only way to get the paid version of the Amazon reading is through the all paid 30 days all paid access. That also gives you access to all of the paid versions of all of these tickers, as well as Google and Nvidia. So great way to support the channel. Again, thanks to all those of you that go ahead and do that. It's the most popular subscription, and by far the only place on the planet where you can find accuracy even close to this, detail anywhere close to this, with a 98% average accuracy. I mean, nobody even comes close to second. Only place to get it, completely undervalued. But we're trying to help people as well as live. Let's get back into it. Another peak early in the day on the 16th, but with a significant move to the downside standing out, and that decline increases with momentum moving forward into the end of the day. We come out of a trough on the 20th and move to a key resistance at the end of the day, or on the cusp of the 20th, 21st. There's a key resistance there that's highlighted and a prominent peak, and then we have a decline on the 21st from that peak to revisit a support level that we recently met. That's followed by a rally into another prominent peak on the cusp of the 21st, 22nd, or in the morning of the 22nd. A cash out opportunity. I'll talk about in more detail in paid version there, and a significant amount of price change, an important support level on a one-year chart scale is highlighted there on the 22nd, so that's important to be aware of. And then there's a day trade opportunity on the 23rd, a peak early in the day, a day trade opportunity in the midst of bumping along resistance sideways. I'll talk about that in more detail in the paid version. On the 26th, hard to determine if we open lower or higher or lower than where we close on the 23rd, but on the 26th, there's a significant decline through multiple supports. A lot of price change covered on the 27th, a significant trough on a one-month scale highlighted there, and a lot of price change within a period of volatility taking us to a prominent peak on the 28th, and from that crest on the 28th, we decline to and through support to meet another support. We do a U-shaped reversal below that support, come back and reuse it as support, and then with sideways rotation along that support, we lead into the 29th, and there's a big move to the upside standing out on a one-month scale there on the 29th. I left out a sharp drop early in the day from a peak on the 27th. And then the sneak preview for the following month of March is 3 pokes through the same price level, followed by a sharp drop off of that third poke. Or maybe it's not the same price level, but the same trend line, followed by a sharp drop off of that third poke. As far as highest highs and lowest lows, so we have a lowest low thus far and a highest high thus far here around the 1st. We have a highest high thus far around the 7th, 8th, probably the 8th, and then a trough, a lowest low, or a significant low on the 9th. We probably see a lowest low somewhere between the 12th and the 14th, but then we go back into highs around the 14th, 15th. Higher price levels, if not the same highs, it'll be higher price levels here on the 21st, 22nd. And then my sense is that probably here on the 27th, 28th, we see the same price levels that we have here on the 21st, 20th, 21st. If they're not the same price levels, then they're going to be the highs for the month there. And that's Amazon for February 2024. Thank you so much for supporting the channel. Make sure to subscribe if you like this sort of content. It really helps out the channel. Most importantly, make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. Stay tuned if you got the paid version. I'll see you guys on the next one. All right, guys. So from the standpoint of the multi-year reading, we had the strife card here from 2022 into 2023. And then we have this fat sudden move higher out of it, which is the 2024 card. So what we're looking for, we should expect a cash out opportunity right around there. It looks like April, May, there may be a pretty good cash out opportunity. So not quite where we are, but we do see highest highs thus far in February with a sharp drop off of that high. You could probably play both directions from February into March, because I think we probably go higher in March, like just briefly. And then there's a significant decline into an important trough there. So by March, I'd want to be short, but you could probably play either way going into the following month. And you can see there's the Ace of Swords kind of indicating that. So if we're at highs here around the 27th, 28th, I'd probably open up a partial short, and then I'd be accumulating a long position in the midst of a drop here. I'd maybe open up a little bit and then close it on the 6th, but I'd accumulate for like a multi-month kind of swing trade or into that high in the coming month. I'd probably open up a partial long on the decline on the 7th, and then I'd complete that long position on the 12th, and then maybe on the 14th if we see that same low. From like a 1 month kind of standpoint, looking at multi-day swing trades, in the midst of the move higher here to a key resistance on the 6th, you can open up a short, close that short the following day, like early afternoon in the midst of a sharp drop. You can open up a long position after a decline that takes place after multiple failed attempts to break through key resistance here. You can open up a long position there, close it on the 14th, or add to it on the 14th, or add to it on the 14th. You can close those long positions on the cash out on the 22nd early in the day. I'd probably open a short on the 23rd to close at some point on the 27th. If there's opportunity, I'd open up a long on the 23rd as well to close at some point on the 27th, 28th. But we should be seeing a new high, guys, based on the abundance card here as the high. It's very likely that this right here is probably a new high, actually, on the 27th, 28th. Either or, but I think it's probably the 27th, 28th. It looks like it's going to be a price level above the 188 mark. And if it's not a new high here, then it's probably here. And as far as the overall comparison of Amazon versus the S&P 500, you can see they follow very similar patterns. No universal hexagram in the Amazon reading, though. Interesting. Looks like Amazon outperforms the S&P 500 in February 2024. And my friends, that's a paid version of Amazon. Thank you so much for supporting the channel. Make sure to follow through on the rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.